If you have money in a TIAA retirement account, some of it may have gone to build the American Dream Mall in New Jersey, and the people who helped put it there are now in court, arguing they do not owe you what the contract says. That's what's buried under the ski slope, the water park, and the Nickelodeon universe. Not the building, the promise. In 2022, 555 Group's real estate affiliate filed a challenge to the mall's official property value, a move that cut annual payments to bondholders by roughly half. Those bonds were purchased almost entirely by Nuveen, the investment arm of TIAA, $800 million, and 90% of it was sitting in retirement funds for teachers, nurses, and university staff who had no idea where their money was going. By early 2026, those payments were covering less than half of the interest owed. In February 2026, the trustee filed a 69-page lawsuit. The allegation is a pattern of wrongful conduct going back to at least 2024, designed to reduce what the mall owed its investors. Here is what happened. If you've driven past the New Jersey Meadowlands on Route 3 and seen that building, enormous and glass-fronted, the size of a small city, you've had the right instinct about it. It looks like it should be packed. For a long time, it wasn't. And the reason goes back to how the project was financed. The project had been stalled in those meadowlands for years. A concrete structure off Route 3 sat half-finished through more than a decade of changing hands, collapsed financing, and construction delays. Then the Gurmezian family took control. The Gurmezians developed West Edmonton Mall in Canada and were the driving force behind Mall of America in Bloomington, Minnesota. By the time 555 Group took over the New Jersey project, the family had decades of experience with large-scale mall development and complex financing structures. Their plan for the New Jersey site was ambitious, even by their standards. An indoor Nickelodeon universe theme park, a DreamWorks water park, a professional hockey-sized ice rink, and on top of all that, an indoor ski slope, what would have been the only one of its kind in North America, all inside one complex in the New Jersey Meadowlands. The total price tag was around $5 billion. To make that work, 555 had to put together a financing plan big enough to match it, and how they structured that financing is what matters. Here's how the deal worked. The American Dream Mall sits inside a special tax zone in East Rutherford. Properties in that zone do not pay standard property taxes. Instead, the owner pays the town a fee based on how much the mall is worth. That fee is called a pilot payment, which stands for payment in lieu of taxes. Higher assessed value means a higher fee. Lower assessed value means a lower fee. Before the mall opened, 555 Group used those future pilot payments as collateral. They issued $800 million in bonds backed by the promise of those future payments. Investors who bought the bonds were buying the right to receive a portion of those pilot payments over time, paid out on a set schedule, secured by one of the most ambitious real estate projects in the country. There is one more thing about how this structure was set up that matters. East Rutherford gets paid first. The town's share comes out of every pilot payment before anything goes to the bondholders. That is not unusual in municipal financing, but it creates a specific risk. If the pilot payment drops, the town's share stays the same. The entire reduction falls on the bondholders. Not split evenly, not proportionally. The bondholders absorb every dollar of any shortfall. Those bond prospectuses landed on conference tables at pension funds across the country, each one promising a return backed by the largest mall in America, backed by the ski slope, the water park, the roller coasters, the aquarium, backed by 3 million square feet of East Coast retail real estate. The buyers weren't trading desks or hedge funds. They were pension managers. Nuveen, the investment arm of TIAA, bought roughly 90% of those bonds. TIAA manages retirement savings for approximately 5 million people: college professors, hospital administrators, public school teachers, people who picked the TIAA option in their employer's benefits packet on the first day of work and haven't changed it since. They weren't speculating. They were placing money into a structured bond with defined collateral and a payment schedule. The contract was clear. The promise was clear. The bond indenture, the legal document governing the entire arrangement, specified exactly how pilot payments would flow to investors and what protections they had if something went wrong. Investors who read that document understood they were taking on real estate risk. They were not, based on that document, taking on the risk that the property owner would legally challenge the very assessment that determined how much they got paid. The mall opened. Then it did not work. The mall opened in October 2019. The ice rink went first, then the amusement park. Lines formed. Families drove from 4 states away just to see the thing. Then in March 2020, the whole country shut down. American Dream closed before the retail section had a single full week of real operation. It reopened that fall with capacity restrictions still in place. A property 15 years in the making had maybe 5 months of real operation before the pandemic hit, and another year of reduced attendance after that. When the full numbers came in, they were brutal. In 2021, the American Dream Mall had $232 million in expenses against $173 million in revenue, a $59 million loss. In 2022, expenses rose to $428 million, while revenue came in at $183 million. The loss widened to $245 million. This was year 3. The pandemic restrictions were gone, the crowds were back, and the mall was still losing $245 million a year. 555 Group needed to cut costs. One route was operational: close things down, renegotiate leases, cut staff. But there was another option, one that did not cost anything to try. Under the pilot agreement, what 555 pays is tied to the mall's assessed value. Lower that number, and the payment goes down. Property owners in New Jersey have the legal right to challenge their assessed value if they believe it is too high. Filing a valuation challenge is a standard legal option. Commercial owners use it all the time. Usually, nobody is arguing over cutting the value in half. In 2022, 555 Group's affiliate, Ameream LLC, filed a challenge to the mall's assessment. The official assessed value was $3.3 billion. The argued value was $1.65 billion. Half. Here is the part that matters for bondholders. East Rutherford gets its share of the pilot payment first. The town is paid before anyone else in the structure, so when the payment drops, the town still walks away whole. The bondholders take the full reduction, dollar for dollar. The retirement funds were eating the entire cut, and by early 2026, pilot payments were covering less than half of the interest owed on the bonds. In February 2026, U.S. Bank Trust, acting as trustee for Nuveen and the other bondholders, filed a 69-page lawsuit in Bergen County Superior Court. The defendants were 555's affiliate, Ameream LLC, and the Borough of East Rutherford. The complaint alleges a pattern of wrongful conduct going back to at least 2024, designed to reduce pilot payments owed to bondholders. Filing a valuation challenge is legal. What the lawsuit argues is that the way this specific challenge was structured violated the bond contract, the indenture the parties signed when pension funds put up the $800 million that financed construction. The complaint asks the court to hold Ameream LLC and East Rutherford accountable for the payment shortfall and to require that bondholders receive what the contract says they are owed. That includes back payments for every quarter. The pilot payments came in short. The gap between what was paid and what was contractually owed is what makes this a damages case, not just a dispute over process. By February 2026, those pilot bonds, carrying a 7% coupon and due in 2050, were trading at 78 cents on the dollar. In June 2024, they had traded at 95 cents on the dollar. That 17-cent drop on an $800 million bond issuance represents roughly $136 million in lost market value. That decline happened before any court decided anything. The market priced in the outcome before the lawyers filed the complaint. If you have a retirement account managed by TIAA, specifically if you work in education, healthcare, or public administration, there is a real possibility some fraction of that account sits in a Nuveen managed fund that holds these bonds. TIAA does not publish line item positions for individual funds in its standard account summaries. Most account holders have no way of knowing whether their fund holds this paper without pulling a full fund fact sheet and reading through the holdings list. That information is available, but you have to know to look for it. If this is useful, subscribe. These are the financial structures that nobody explains until they stop working. The Germaisian family's other major properties have faced creditor and financing disputes before. Mall of America has dealt with creditor disputes. West Edmonton Mall went through financing restructuring. These are not new situations for the family. When Ameream LLC filed the assessment challenge, they were taking on a large technical valuation fight. Getting a $3 billion property reassessed does not happen overnight. You need specialized appraisers who work on commercial real estate at this scale, attorneys who know how New Jersey tax board proceedings run, and a valuation methodology, typically an income approach that models what the property actually earns rather than what it costs to build, that is specific enough to survive administrative review. That kind of case takes months to put together. The filing in 2022 was not improvised. Whether it holds up legally is a different question. U.S. Bank Trust is litigating on behalf of investors that include Nuveen, which is part of TIAA, an institution that oversees about $1.4 trillion in retirement assets. This is not a fight where one side runs out of legal fees. But there is a problem with what happens next. Courts move slowly. Meanwhile, those bond payments keep coming due on schedule, and the bondholders keep coming up short. Every quarter that passes without full payment is a quarter the bondholders do not recover. The legal question gets resolved eventually. The missed interest payments do not get reversed at the same speed. If you want to keep following the money on stories like this, subscribe. There is a third floor at the American Dream Mall. If you have visited, you have seen it from the escalators. The first 2 floors are active. The food court is open. The Nickelodeon universe is exactly as loud as you would expect. But the third floor is something else. Wide corridors with almost nobody in them. Construction walls in spaces that were meant for more retail. Signs that say coming soon and that have said it for a long time usually mean more delay. And there is one more thing on that third floor, an escalator that goes nowhere. It was designed to connect to a 4th level. The 4th level was never built. The escalator rises from the 3rd floor and ends at a ceiling, sealed off during construction when the 4th floor plans were shelved. It runs during business hours, a moving staircase to a wall. Anyone who has spent time in commercial real estate develops a sense for the difference between a building that is struggling and a building that has already made up its mind about what it is. The American Dream Mall has everything it needs to feel alive. The roller coasters run, the water park fills up every summer, the ski slope operates, and on the 3rd floor, the escalator runs to nowhere all day long. Share this if you know someone who works in education or healthcare and has a TIAA retirement account. The people most directly affected by what happened at the American Dream Mall are the ones least likely to recognize the name of the company that built it. The lawsuit is ongoing. The mall runs. The Nickelodeon universe sells tickets. The DreamWorks water park fills up in July. Ameream LLC collects whatever revenue the property generates. U.S. Bank Trust continues to litigate. $800 million in bonds. A $3.3 billion property that its own owner argued was worth $1.65 billion. Pension funds that bought the promise are now funding the legal fees to enforce it. The American Dream Mall is still open. The escalator on the 3rd floor still goes nowhere. 555 Group is still in the building. The project was built with $800 million in financing from investors who expected the bond contract to hold. Now, the meaning of that contract is at the center of an active legal dispute, and the people whose money funded it are still waiting to be paid back. Next time, we are looking at a real estate deal that rewired an entire city's tax base. The people who signed off on it knew exactly what they were building before the first meeting ended.